see if we are live so we don't cut off pearls of wisdom from today's guest, who has many pearls to offer, I think. So I think we are now live. Great. We are talking to Ken Burke of Entrepreneur Now. And I think that's the brand you're going under. I ought to double check these things before we go live. We are talking about some fundamental stuff, how to make decisions as an entrepreneur. There is no shortage of stuff out there that you feel like you should be doing. Is it TikTok this week? Is it, some other platform that I haven't even heard of that is next week's, soup du jour? Or should we in fact be learning how to decide which one to do? And I think you know where I'm going with this. Anyway, today's guest is Ken Burke. So Ken, thanks for coming on live with us. Really good to have you with us.
Michael, great to be here. Thanks so much for having me.
My pleasure. So we'll hear all about you in a second. We'll get you introduced for the podcast audience. So as ever, folks, what we're going to do is basically record a podcast live with a sort of nod towards social media, because I'm not very good at social media, but I love podcasts. So we're kind of, coming into the 21st century somewhere here. But if you have any thoughts or questions for Ken about the subject, not should I start a retail arbitrage business next week or something irrelevant, but we're talking about decision making, then please pop those into the comments and we can weave those into the show. I do see your comments appear on our software here. Other than that, we're going to get on and talk about this critical subject. So are you ready to commit your life to... No, I won't go there. Are you ready to record a podcast episode, Ken?
Absolutely. Let's go for it.
Let's do this thing. Here we go then. Ladles and jelly spoons, boys and girls, welcome back to the 10K Collective podcast, the place to be for 6, 7 and 8 figure Amazon sellers and e-commerce operators. I think today's episode is going to apply to any entrepreneurs, really. We're talking to Ken Burke, who is a veteran of startups. He's built companies, he's sold companies, a Silicon Valley veteran, which is great because it's outside the sort of Amazon bubble, which is really healthy. And we're going to talk about a really important subject, which is how to make decisions. It's one thing to have a bunch of promises from some marketer about TikTok's going to transform your business or whatever the soup du jour is, but it's another to actually decide when you have finished watching the video or even gone home from a mastermind where we throw people in at the deep end sometimes. What am I going to do next? That's a critical question. So Ken, thank you so much for coming on the show.
Oh, it's great to be here, and I love the topic as well. It's actually a really important one, and one that I certainly have struggled with as an entrepreneur for years as well.
Yeah, your blog, by the way, over at is it Entrepreneur? I'm butchering things already. What's the blog where we can
You're
read more
good. You're good. The
Entrepreneur
site is
Now?
entrepreneurnow.com.
Yeah, so I've read several of your well-written blog articles, and they're refreshingly sort of topical. They're not about the latest thing. They're about evergreen problems we all hit. And yes, you've been very honest about the struggles around this. So I guess we ought to do the traditional thing where I ask you to tell us a bit about your background in a nutshell. So just tell us, a bit about who Ken
I will
Burke is.
keep it very short because I'm very uninteresting, but basically started I've actually been in the e-com space since 1995. I started one of the largest e-commerce companies, both Gartner and Forrester ranked as a top 5 platform for many, many years. We did about $2 billion a year in online commerce for our customers. The company was market live. We ended up selling it in 2015, 2016, right about there, to a very large software conglomerate. And we had a 10-figure exit, which was great, and moved on. But our customers were major retailers here in the US. We had some international customers as well, a lot of different brands. So have a lot of experience. I remember working with Amazon when they were just getting started with third-party sellers. And we were doing integrations with our platform and them, and all the way up to where they are now today. So lots of experience in that area as well. Currently, I help entrepreneurs start, grow, and run their business on the Entrepreneur Now Network or entrepreneurnow.com. Also an author, and I'm a practicing entrepreneur. I'm currently working in the e-learning space, and I have a startup, 2 startups right now. Well, one in the software space specifically, which we can get into and talk about, but all the same things your audience is struggling with, I'm struggling with every day as well. So this is all real-time live stuff.
Wow, well, it's kind of reassuring that somebody's had a 10-figure exit, which is, a magnitude, 3 orders of magnitude bigger than the 7-figure exit that many of us in e-commerce are aiming for. You're still struggling with the same stuff. So that's kind of reassuring and kind of a reality check as well, I guess. That there's no magic over the other side of the rainbow, it seems.
You know what? There are always new challenges because you start businesses And that business, the one that rode you and took you there, and maybe you have probably a lot of listeners that are on that growth trajectory with Amazon or with other parts of their business as well. And yeah, when you go and you sell it, or you decide to stop it and do something else, yeah, a whole new set of challenges start. I didn't realize that until I started it again, because you kind of ride on your successes and you got to get used to things. And now starting all over, having a small staff, going from a large staff and managing executives to a small staff, going from having a lot of influence to having no influence right now,
Right.
in terms of my little community and things of that nature, and building that back up is a fun ride. But it wasn't one I was all fully expecting. But I know that's a different podcast, so we'll talk about
Yeah,
that
that's
later.
that's obviously that would be an interesting podcast, because I was having a beer with one of the guys at the mastermind who had a little seven-figure exit. Let's say little, big to me, but compared to
It's
10,
big.
small,
Yes, it is.
and it's significant for him. It wasn't retirement money, but it was certainly sit back and think, what do I do next money, and it is a problem. I mean, he's actually been trying to work out what to do next, and it is a good
It's
problem to have,
not
but it
easy
is a
to
problem.
figure out. But this is something
However,
that your entrepreneurs are going to be faced with after their huge successes on Amazon and in the e-commerce space, which is just still continuing to explode. I started in 1995, and it had just exploded and exploded and exploded. It just, growth rates have just consistently been great, and it continues to do it. It just seems like it's just not stopping. So I'm thrilled that your entrepreneurs are out there, charging the course and making their way, and building up their equity in their business and their cash in their business, because that's really important. But again, we'll get into that.
okay, yes. So let's try and get them to that fun point where they have to decide what to do with seven figures of money in the bank. So strategy and mindset, we're going to talk about. So tell me first of all, so that's what I've got written on my sheet next. But how to make decisions. The word strategy comes to mind. The word mindset comes to mind for me as well. H- How do these things all interact? How do you actually think in a
Well, it's a
real life context? How do entrepreneurs really make decisions, and how should they make decisions? Let's start with that. Is there a difference
Yeah, it's
between
a
what they
great
should and what they do?
question.
Yeah.
Well, the first challenge that entrepreneurs run into, I'm going to start talking about mindset a little bit, because it's so important. And every entrepreneur runs into this as well. So a couple of things we need to think of. First of all, I call it analysis paralysis, where entrepreneurs get into this process of making decisions where they continue to analyze, and they just simply put off the decision. And it's my philosophy, my contention, and my experience that says, I would rather you make a slightly wrong decision, not a massively wrong decision that's going to put you out of business, and do something and take action and get feedback on that. So for instance, let's say that I'm going into a new category on Amazon, or I'm thinking about doing a product line extension, or maybe going private label, or what have you. And I'm weighing the pros and cons, and we'll get into the tactics of that in just a moment. But at the end of the day, if you're really unsure, and if you don't know exactly the direction, my recommendation is you actually take action, start down the road, and see. And what you're doing is you're going to be able to collect feedback, and you're going to collect information, and then you're going to be able to make a new decision or pivot to a different decision. And by the way, that's okay. So I would rather you take action. Here's the deal. And another thing about entrepreneurial mindset that I talk a lot about, and have written a lot about, and recorded a lot about, I have courses on it and everything, is that action creates momentum. It is a fundamental tenet, if you will, of entrepreneurial mindset. So the more action you do, the more momentum you're going to create. And that action that you're taking is going to lead you down a road that may or may not be the right decision, but you're going to use the best information that you have at this moment in time. And then in a week, a month, a year, you're going to have more information, and you're going to make other decisions. So I'd rather you take action and move forward and test the waters, because bottom line is what we do in e-commerce. And I taught this to a lot of my clients as well. We test, measure, and adjust. Test, measure, and adjust. You do the exact same thing in your business as well. You test what you're going to do. You measure the results of that. And hopefully that's what all of your the Amazon sellers that you have listening, and then in general, in business in general, and then you adjust. That's what I want you to do. Test, measure, adjust. You do it in your marketing strategies. You do it in your marketing funnels. You do it in your conversions. You do it with your customers post-launch. I want you to do the same thing in your business as well.
I like it. I mean, that sounds like, on the one hand, every business book you've ever read, on the other hand, comes from the school of hard knocks as well, because I'm sure you've done that paralysis analysis to yourself, but clearly not to the point where you couldn't make a 7-figure exit, or 10-figure exit rather. So still getting my head around that number. So let me make this fairly concrete then. Let's say, for example, let me choose some members of the mastermind, the typical kind of dilemmas they come up with, because they're my kind of target listeners. People who take action, they've got businesses, quite often 7 figures, sometimes hedging into 8 in dollar terms. Let's say somebody who's got a lot of reselling that they're doing, and they're wanting to create a private label or custom product type business, but they're struggling to make decisions around that. How would you sort of approach that kind of thing, for example?
Yeah. So the tactics for which making the decision, there's two actually tools. One tool I actually have on my website, and doesn't often get used because I don't talk too much about it, kind of buried on the website, but you can find it at kenburke.com and entrepreneurnow.com. And it's called the decision matrix. And essentially it is a spreadsheet that you actually build criteria for, and you rank the criteria, you weight the criteria. It's a scoring system for making any decision. You can make any decision in life if you follow it. I actually have an article on it, and the downloadable spreadsheet is available as well. So I want to make that available to all your listeners. It's all free of charge. I just thought of it in my head because it basically, what it's doing is it's walking you through the structure of creating a decision-making process where you actually take the different alternatives. And then what you want to do is you want to come up with a criteria for which that decision is being made. And now here's the key to the whole thing. It's the reason why it's a multi-attribute decision matrix, which is what it's called. I actually created it after it is kind of my invention, although I did take it from my MBA program. It was used for a completely different purpose, and I applied it to decision making, and I've been using it ever since. People love it. And essentially, again, what you're doing is you're not just creating, do I make decision A, B, C, or D, whatever. It could be 2 decisions, 2 choices, 3 choices, 4 choices, 5 choices, whatever you're trying to do. Whether I go private label, whether I don't go private label, as an example. I want to understand the criteria for which you're making that decision. I want you to understand the criteria, and then I want you to weight the criteria. So let me give you an example. Is it going to increase my revenue? Can I grow my business? Would be a criteria. And you want to weight that on, is it going to distract? Is it going to make it more profitable? Do I have to hire more employees, or is it going to expand the overall strategy? Is it going to make my company more valuable? These are all criteria that you would use in order to make the decision. But then what I want you to do is I want you to weight the criteria, because some criteria is more important than other criteria. Okay. So maybe making a profit right now, short-term profit might be a criterion, but it's not the most important thing because you're looking at more of a long-term business. Or maybe improving my conversion rate is a criteria, or growing my brand is a criteria. But growing my brand, important, but not that important, right? So what I want you to do on a scale of 1 to 10 is you just weight the criteria, and then you just do the math. So each criteria is weighted, and each decision gets a score for each criteria. And then you actually do the math, you total it up, and you have your decision. I know it sounds a little silly, but whether you use a spreadsheet or not, the framework is still the same, that there is a logical process for making a decision. And you need to understand what the criterion that you're using to make that decision and how important each piece of the criterion is. That's the fundamentals of making the decision. That's number one thing that I would look at. Let me give you another one real quick before you ask a question here, is you got to look at the financials. You need to model whatever decision you're making. You need to pull out your 3-year financial model, which is your financial forecast. And you say, Michael, you're saying, oh no, I don't have a 3-year financial forecast. Well, I know, Michael, you do, but maybe some of your listeners don't. You need to have a 3-year financial forecast, period. You cannot run your business. If you don't want 3 years, do 1 year or 2 years. You manage on the first year, and you manage the first year very tightly. Year 2 and year 3 are a little bit more out there in what I call the ether, but that's still fine because you know where you're going. And then here's what I want you to do. I want you to measure the impact of those varying decisions. Let's say it's, again, go private label, don't go private label. What are the things that I want to know about? And when I build my financial model, how much do I have to invest in startup capital? How long is it going to take me to ramp the revenue, as an example? How much cash am I going to need in order to execute this? All of those things and more will be told through your financial model. Here's the other thing. What is the value or the impact 2 or 3 years down on my company valuation based on this decision? The model will tell you that as well. And it just so happens that on my website, I do have this model as well. So that actually does cost money, so I don't want to promote it, but I do want to tell you there is some free videos on there that can help you walk you through that. But this financial model is critical to your overall success.
Wow, that's a very, very, very complete answer. I like it, and this may
Okay,
explain why
good.
you're
I know.
selling businesses for 10 figures, and the rest of us are selling them for six or seven, or in my
That's
case, none
okay.
yet.
I don't
But
care if you're
I
selling for 5 or 6. It doesn't
so
matter. It's what you're creating is what's important.
I really like this. Well, a couple of reflections. I mean, first of all, a reflection from the mastermind meeting just literally a few days ago. One of, I think, the biggest seller in the mastermind was talking about developing more private label products. They have some reselling and some private label. And this exact question that came up, I was just saying, look, I'm not I was about to say financial therapist. What's the right word? Accountant. But sometimes it feels like a therapist. It's more therapy kind of related than you'd think, talking about numbers, right? With an entrepreneur, there's emotion involved. And I was saying, look, you need to sit down with you got a fractional CFO, which is fantastic. Congratulations. You got a business coach, which is even greater, who's done big numbers in her industry and or his industry. I can't remember which now. And I said, you need to sit down with your CFO and plan this stuff out so you can answer questions like how much cash is it going to take me to build a 2 million a
Critical.
year, private label business, for example. Like, if you can't answer that question, I can't really help give you any more input. So the financial forecast is great. I do remember sitting in another mastermind meeting where one of the bigger, more successful sellers had been established for centuries, literally. Um, in their business, which is very unusual but not unheard of in e-commerce, said, right, somebody said, I've got a 1 year cash flow projection. He said, great, make a 3 year one. We've got a 10 year
Hey,
one. It
yeah.
was like
Well,
an
10 years,
unusual bit
I
of
would say
dick
10
waving
years
of
is
the
too
right
far.
kind.
But10
Yeah.
years is too far, by the
Yes,
way.
a bit
That 3
exaggerated. Yeah.
years, you can only manage to a year. And what you need to do when you manage your financial forecast is you rev it every month. You revise it every month to make sure that it continues to be updated. So it's a rolling 12 months. That's what you run the business on. Year 2 and year 3 are more, again, projections of what
Yeah.
could happen. Anything beyond 3 years, I think it's ridiculous. But if you are looking for investment, I happen to know a lot about that as well.
Yeah.
Is that you do need a 5 year projection. So just kind of keep that in mind. VCs want to see 5 years if anybody out there is looking for it. But 3 years is a good thing because it gets you on track for a longer strategic. But 1 year is really what the key is. That's what you really focus in on.
That's interesting. So this is so fascinating. This has gone much deeper than I was expecting, which is dumb because obviously you're a seriously sophisticated entrepreneur. But this is
No,
very
not at
interesting.
all.
So here's what I'm getting. So really, a 1 year forecast is critical for actually managing. You update it once a month. 3 years gives you a sort of more of a sense of vision. That's it's given in numbers, but it's very fairly fluffy. And 5 years is just for sailing because it's not actually real, but the VCs think it is. Right? Is that a fair summary?
Yeah, it's for I would say it's for investing or selling. And again, different
Yeah.
businesses require different things, but anything beyond 5 years is ridiculous, in
Yeah.
my opinion,
Sure.
and probably in the investor mind opinion as well. But investors do
Yeah.
like to see they want to see what you could be. What what
Yes.
what is the potential? And
Yeah.
typically, investors want you to sell within 5 years, and that's why they want a 5 year projection.
Yeah, well, the only defense I would say about for that chap who came up with the 10 year projection is I don't think he wants to sell. I think he just wants to build like crazy. I mean, and maybe pass on to literally his grandchildren in that case.
Yeah,
But
absolutely.
also, I think what it does do is the mentality that goes with it is I like it. It's a bit like those Japanese firms that famously had 100-year plans. And okay, that didn't work so well for the Japanese economy the last 2 or 3 decades. However, I like the mentality that is a counteractive to should I do TikTok this week or YouTube, right? I mean, I think because what's coming into this is also a bit of mindset in the sense that if you do a 3 year financial forecast, that kind of discipline, if you actually execute it, has got to change. It's not the question that you do the forecast because you're disciplined. I think almost I would say making yourself do a forecast makes you more disciplined. Would you say that's right? How does the
There's no
mindset come into
question, and
this?
that absolutely it's discipline, but it's also that you have a strategy. So, in order to do a financial forecast, you actually need a strategy. And the other part of a financial forecast, you have to absolutely make sure. I know this podcast isn't just on financial forecasting, but it's very important. Is that you have to have what's called a justified revenue forecast. What you cannot do is just say, "I think I'm going to sell $10,000 a month here, and then 20,000 here, and 30,000 here, and $40,000 here." You have to actually build a bottoms up model that says, I'm doing these marketing activities. So you have paid search, organic search, and organic search is a cost. So you have to put the costs in as obviously with what my ROAS is with my paid search, and you build it up that way. What am I doing in brand building? What am I doing in social? Whatever you're doing, and everything contributes to that revenue. It doesn't just happen. You actually have to have what's called a justified revenue forecast. And then what comes out of it is your marketing plan, your selling plan, your revenue plan. Actually, everything comes out of it from there. Your operational plan, how many staff you need to have in customer service, how many you have to have in the fulfillment and distribution center. All of it comes out if you do it. And you have to have the discipline to do this. So, and a lot of entrepreneurs, I know a lot of entrepreneurs listening now who do not do this. And it is a big mistake, because the fastest way to go out of business is run out of cash. I had an entrepreneur yesterday. I literally was on the phone with him, and I won't say who it was. Tell me that he's running out of cash, literally like this week, next week. And I'm like, and he has refused to cut back his business, which is a huge mistake. And he's like, well, if I cut back my business, I'm going to harm it. You don't understand. When you run out of cash, you're out of business, period. Right? So cash management is really the driver in why you do this and when you need investment. If in fact you do need investment, I don't know if most of you are out there looking for investment or not, or even considered it, but you need to do that 3 to 6 months before you need it. And if not, you also need to cut back your business 3 to 6 months before you run out of cash. That's another really, really important. You need to cut earlier than later. And it's our entrepreneurial intuition that we don't cut. We don't cut people. We don't want to slow down any of the part of the business. And we always do it too late. And guess what happens? You end up running off a cliff and going out of business. And we don't want that to happen to anybody.
Yeah, so I guess to be fair as well, if you're a bit more bullish or more growth obsessed, I was about to say, I guess any entrepreneur is going for growth, but you're saying there's a reality sometimes you've got to cut, or to be fair, the other side you've just flagged up, you could get investment or funding, whether investment or debts. But either which way, you got to see it 6 months out, right? That's the critical bit that I'm taking. Is that right?
You're 100% right. And you're right. It's either investment or debt. And a lot of your listeners might take on debt to fund inventory, to fund AR, and fund other things. Things like Payoneer and other companies exist to do things such as that. So definitely keep that in mind as well. Yeah.
So let's come back to this decision-making thing. I mean, if that's all we focus on, it's huge. But then I'm going to be very happy with this podcast, although we are shading into how we deal with creating a strategy to survive downturn / recession, whatever it's going to be, the polite words for economic contraction. And negative growth is my favorite term, because it's like it's a very mealy mouth term. There's no such thing as negative growth. It's called shrinking as far as I'm concerned. But anyway, even if we don't get into that, I mean, let's talk about the fact that we have to have some kind of, on the one hand, some kind of rigor, let's put it in that way. And you've talked about that. And by the way, I would definitely should advertise, whether it's paid or free, those very rigorous tools that you've created, because I think they may well be incredibly helpful to people. So we'll talk about that at the end of the show. I'll make sure we get links to those. But coming back to the ordinary person who is at, doing 7 figures maybe, or, mid 6 to late 7 figures, that's the spread that I tend to focus on in the mastermind, and thus try and focus on within the podcast as well. It feels kind of intimidating to say that you've got to do all this very, very analytical work, whereas maybe they've been used to being more intuitive, shall we say politely. How do we actually get this to actually happen, rather than it being another thing that talking about the should do versus actually do? How do we bridge that gap between the counsel of perfection, but then you're already working 80-hour weeks, keeping the wheel spinning in a bad week anyway, and how do we actually get to implement this stuff rather than think we should do, feel guilty about it, and then not do it?
Right. Yeah. So a couple of things that have worked for me in the past is what I call, and depending on whether you have a staff of 1 or you have a staff of 100, this truth really does happen, which is I suggest that you create a set of key initiatives. Key initiatives are the things that you want to focus on. Here's the deal. Entrepreneurs by definition are not focused, and entrepreneurs by definition must be focused in order to actually succeed. So the biggest problem that entrepreneurs run into in their challenges with execution is simply that they're not focused enough. First of all, a couple of rules in my entrepreneurial mindset. 1, break down things into small bite-sized pieces. So if you're going to get overwhelmed, being overwhelmed will stop you from, you get paralysis in moving forward. So I really think it's very, very important to step back and say, I'm going to go ahead and take whatever big thing I'm trying to do and break it down into bite-sized pieces. That will allow you to prioritize a lot easier than trying to take something huge. Next thing is create key initiatives. What you want to do is in any given year, and I know this, I'm going to start year going then detailed to the week or the day, because I know that's what the entrepreneurs are dealing with each and every day. But you want to start off with every year, what are the 5 key things in my business that I want to do? What do I want to move forward? Obviously, I want to grow my business. Okay. So it might be growing top line revenue. I might want to bring down my costs. Okay, then that could be another initiative. I might want to go into a private label business. That's another initiative. This is at a high level. You can only have a maximum of 5, and the smaller your organization is, bring it down to maybe 3 or even 2 or maybe even 1 in a year. But you will make more progress on that focus and being focused on just taking one thing at a time. I always say master and move on, master and move on. This is the problem of entrepreneurs is we don't focus. We want to do everything and we have to make those choices. So what you want to do is you want to make the choice, obviously, that's going to yield you either the highest growth, the biggest revenue, or maybe laying a foundation for the future is really important to you. And that might be the thing that you want to do. So it depends on what your priorities are. We don't always want to assume I want short-term growth and I'm going to do that at all costs. I get that's what a lot of people want, but that may not be the best thing for your business as well. So sometimes stepping back and looking at that. The second thing is that for each initiative, you have a series of objectives, and objectives are measurable, and they're measurable down to the individual week or month that you're holding yourself or other people accountable. So even if you have one objective, which is to go into a private label, third-party private label business, then you've got to list out all the things that you need to do in order to get that thing done, in order to actually get it to launch. And so that you create this set of initiatives, set of objectives that then are measurable, that you can say, I'm going to do this by this date, this by this date, this by this date. Now, this is very important if you have anybody else helping you execute other than yourself, right? Even for yourself to have dates that you're measuring against. I want to launch on this date. Then I work back from a launch date and I work back exactly what I need to do in order to do that. And then I start prioritizing from there. I start figuring out what's really essential. Give you an example. In a product business, I run software businesses. And in a software business, we have something called an MVP, minimum viable product. And what you inevitably do in a software business when you're launching a software business is you have to create enough of a product that people can buy it, but not too much that it takes years and years and years to develop it. So you're constantly prioritizing and deprioritizing certain features, certain aspects of your platform as you go along this continuum, because you've set a date that says, I want to launch on November 1st, let's say, or December 1st. And from there, you drive the entire team to that launch date. I recommend highly, by the way, very important, create launch dates for yourself, because they will hold you accountable and you will drive to a date. It is amazing what happens when you drive to a date that you can't miss. And you will find yourself having to make those decisions about, do I spend more money to do this? Maybe I don't have the money. Do I take more time and extend the launch date, or do I add more resources? That's the triangle that you need to deal with always in dealing with this. So prioritization will start to come out and start to force itself if you do these things. Set an initiative, focus on that initiative. If you want 2 or 3, that's okay if your organization is big enough to handle it. And then create a launch date, and then focus and prioritize with a list of objectives that will get you to that launch date. Period. End of story. That will do it every time. I know that might sound like business 101, but it actually works.
Yeah, well, the difference between theoretical ideas and what actually works is the, I can say $60,000 question, but that's way undervaluing it, the $60 million or even more in your case. So this is really valuable stuff because you've actually done it. So it's not just theory; it's theory meets reality. But what does strike me is actually there's a very weird artificial distinction that comes up. I mean, I think people in the early stages who never actually build businesses, and I tend in that direction, which is why I'm ended up building a podcast rather than a great e-commerce business, I guess. We all have our strengths and weaknesses, but they obsess about the concepts and how big it's going to be. And then people at the 6, 7, even 8 figures sometimes get very operationally focused and don't value planning enough, and because they think, oh, that's just theory, it never works in practice. And you're living proof that it does. And I think the combo of the two is really super powerful. And that's what I see in the mastermind with the people who actually grow. They're actually hungry to read business books, weirdly enough, even though they're working super hard and they value hard cash. And they value things like cash flow projections and other seemingly abstract things. So talking of which, I think before we overload people with a ton of different things, I would love to come back to just pointing them towards the 2 tools that you mentioned. One is that decision matrix, which I think is free, and then the other one is your paid forecast planning thing, which I didn't know about, by the way. But I just, that sounds incredibly valuable to me from experience over the years. This stuff is super important.
Oh my goodness, it's a great tool, and it's available on our website. We do have articles around it that are free. The actual tool itself, along with the 4-hour course, will teach you everything to do with a forecast. It actually gives you the model as well. So I'm not here to sell anything, but it's like $99. So it's not expensive at all. So I just put it out there because it's a really good tool, and we make it super cheap so that people can actually use it. It's one of our most popular courses. So
I mean,
anyway,
yeah, I don't think you should be afraid of selling something for $99. I mean, if you want to talk to an accountant for half an hour, it's going to be more than $99 if
no,
they're worth their salt.
absolutely,
I mean, so
absolutely.
it's super cheap. So just to put some, so people can get hold of it, if you're listening to the podcast, amazingfba.com/matrix, which is a very cool thing to be able to reference, not the Matrix, because I don't want to be sued by Warner Brothers. Amazingfba.com/matrix is going to be for the decision making matrix. We'll redirect that to the appropriate place on Ken's site. And amazingfba.com/forecast, FORECAS for sugar T, will redirect to the model that helps you make forecasts. Because there is such a strong correlation between the people I've seen killing it in e-commerce, 10xing within 4 years. I mean, okay, they coincided with great, growth in e-commerce, but nevertheless, and people who have cash flow forecasts, they are absolutely correlated. So I can say for a fact, as a guy observing, the day-to-day, month-to-month struggles of these guys and successes, that's so true in real life. It's not just a nice theory, and it doesn't just apply in Silicon Valley, although it clearly does as well. So, Clem, this has been fantastic. We're going to separate out slightly the episode on how to survive recessions, which is kind of probably more of the same intelligent approach, structured approach, but nevertheless a different sort of mental game to play, right? So, for the moment, I'm just going to stop us there before people's brains explode because there's so much to take on board. If you're listening, I just really urge you to do a couple of things. I mean, first of all, go read Ken's stuff. So, where's the best place to go for that, Ken? Is it
Sure,
kenburke.com?
yeah. Absolutely. It's entrepreneurnow.com. We also have another site. I have my own site, kenburke.com, which has my latest book,
Okay.
an Amazon bestseller. Thank goodness. We released in January, called Prosper: 5 Steps to Thriving in Business and in Life. It's a little bit more of a self-help book or a personal development book. So if you're into that stuff, that is great. But it does have a lot of business ideas as well, and all my philosophies around that.
Great. Well, I mean, I think, if anyone's going to deep dive into your way of thinking, which I think is so valuable, the book Prosper, 5 Steps of How to Survive in Life, or something like this. Like, just look at Prosper by Ken Burke, Burke, if I've got it right. And I would encourage you to read the blog. And above all, those tools sound really, really powerful. I haven't looked at them myself yet, but I do know that cash flow projection is absolutely where it's at. This is probably underplaying what you got there, right? Cash flow projection alone is a big job, but that sounds like you got some more stuff under the hood there. So I'd urge everyone to really, if you're serious about your business, to go and check that stuff out. Ken, thank you so much for blowing our brains, and hopefully when people have absorbed it, also really moving us on with our decision-making processes. That's
That's
fantastic stuff.
great. That's great. Thank you so much. It's been fun.
Right then, by the magic of back-to-back podcast recording, we're going to go straight into how do we create strategies to survive recessions. Ken, how much time do we have left on the clock for you? Because I'm aware that
I'm good. I had a meeting at 9 o'clock that it looks like, because they're at a trade show, an Amazon trade show, actually, a company that I'm on the board on, is not happening. So I was just monitoring that. Sorry, I was monitoring that on my phone, but looks like
not
they
a
haven't
problem.
joined. So we're good.
Great. Well, look, we'll need to keep it reasonably short because I've got to go and do some mundane stuff that isn't very strategic. But let's talk about
You
this
got
because
it.
it's too important not to. So I'm going to reintroduce it. So if you're watching live, sorry if it's a bit weird, we're prioritizing podcasts. By the way, if you're watching live and not listening to this, it's designed to be a good podcast and probably not very watchable. And if you're still with us, then go and get yourself over to Apple Podcasts or Spotify, for goodness sake. You're going to enjoy it a lot more while you're listening to it, while you're driving, washing up, or running, or whatever it is you do while you listen to podcasts, than sitting looking at me, looking at a camera. Anyway, that's my my pitch for podcasting. Here we go, round two. So camera back to me, and here we go. Ladles and jelly spoons, boys and girls, welcome back to the 10K Collective podcast for 6, 7, and 8-figure Amazon sellers and business owners. And today we're talking to Ken Burke, who has a fantastic breadth of knowledge and abilities in all sorts of industries, including e-commerce. Sold a company that did a mere $2 billion a year in the e-commerce space recently, and is also a huge Silicon Valley background. Just I could go on forever. Incredible guy, and we're going to talk about how to survive the recession. So Ken, welcome back to the show first of all.
Oh, thank you so much, Michael. Glad to be here. Excited to talk with you.
Yeah, I mean my brain's slightly blown, but also excited by the stuff we talked about with how do you make decisions, and it's a very rigorous thing, and that's something that's emerging, is that sort of rigorous underpinnings and thought through strategies and stuff. But let's talk a little bit more about the sort of how to not be chicken little here. So we obviously keep hearing words like downturn, recession from our leaders and central bankers in the UK or the US, and obviously everyone's concerned, and we need to prepare in some form. So how do you even begin to advise an e-commerce seller in this kind of environment? Where do we even start?
Yeah, I mean, trying to predict the future is a really difficult thing. So, and there's a lot of people out there trying to do it. What's going to happen in the UK? What's going to happen in the US? Where is the bottom, and when do we start crawling out of the bottom? How much is it going to impact my business overall? And those are all the things and all the considerations, but you can't really time it. Here's the deal. The deal is cash is king. And if you have enough cash, and I lived through two major recessions. I lived through 2001, because I'm old. So, and that was the crash of we call it the dot bomb, where the NASDAQ blew up. A lot of your listeners don't even remember this, might not even been around in 2001, who knows? Or they would have kids. And that was a disaster. All these dot coms, all of them, which all of your listeners are in the business of right now, imploded and were worth billions of dollars. And then the next day they were worth nothing. And there was no way to get out of them. Okay. So that's a catastrophic event. Next catastrophic event was in 2008, where here in the US, the housing crisis occurred, and that rippled, of course, throughout the entire world, as does as does things. We are one economy, by the way. While the US might bounce back from this recession a little bit faster than the UK, I think the UK is a little behind us in terms of the curve. And I don't know if that's a good thing or a bad thing. It just seems like you guys are going to go through a little bit harder, a harder hit than we're going to go through here from everything that's indicated. But the point is that in 2008, everything was cut. I'll give you an example. I was actually a Sequoia-backed company, and some of your listeners know Sequoia is the largest and most successful venture firm in the history of the world. They invested in Google, Yahoo, Instagram, not Instagram, sorry, YouTube, Apple, everybody, right? Everybody that's been successful, they've invested in. And they invested in myself as well in the company. And in 2008, they basically said, your funding's over, it's dried up, you're not getting another dime. Cut now, cut deep, because you're not going to see any money for a couple of years. So I'm not suggesting to your listeners that they do that. What I'm suggesting is you have to prepare for the recession. And if you need to slow down your growth a little bit in order to survive for the long term, my recommendation is you do it. And I would also recommend that you cut earlier than you think you're going to need to. Here's why. Entrepreneurs are invariably very, very optimistic. And so you think they're going to ride through this unscathed. What you want to do is you want to make sure that you have enough cash in the bank, and the cash projections for the next, I would say, 3 to 6 months minimum to pay payroll and keep the lights on and business going. You're like, Ken, that's crazy. We have enough cash for a month. Well, if you have enough cash for a month and you're going into a recession, holy crap, you better start cutting, and you better start cutting now. It's probably already too late. You better start downsizing your business. There are more businesses that go out of business because they grow too fast than they grow too slow, right? So when we talk about that, is that cash is king, cash is everything. And so we have to really watch that. Now, if you've got 6 months of runway, I don't know that I would cut back as much. I might take advantage of the market where other people are dropping out, and I take over from there. I'll give you an example. After the 2001, 2002 fiasco, we emerged as an e-commerce player as one of the leaders in the industry. Before that, there were hundreds of e-commerce players. They all went out of business. We didn't go out of business for luck. I don't know why. It wasn't brilliance, but it was just luck. We didn't go out of business as a software company. And all of a sudden, when everything started to come back, guess who was positioned in the number one spot? We were. Us and one other company, because we didn't take on a lot of what we call dot bombs, where a lot of our competitors did. So they were all gone. And it was just us and a handful of companies left to take over the market. 2003, 4, 5, and 6, our best years ever. We grew like crazy. I want you now to apply that to 2022. I need you to survive through this process, absolutely, and then thrive after the recession is over. You want to be looking at, not today, you want to be looking at, well, you want to look at today, you want to make sure you survive, but you want to be positioned as a leader in your segment where you can gobble up your competitor's business because they didn't do what you did. Slow down now so you can accelerate later. That would be my advice overall. I know it sounds like this is anti-entrepreneurial, but I got to tell you, it always works. Don't be one of those people where you're running out of cash and you're constricted right when it's time to grow, you're constricted. When is it the best time to buy real estate, right? Everybody knows this. Right after the downturn, when the market is bottomed out, when do you buy real estate? Right then, right at that point. The reason is nobody else has the cash in order to do it. So the more cash you have on the sideline, this is true for stocks as well. The more cash you have on the sideline, as soon as that market starts to go bottoms out, you start throwing money in the stock market. You start throwing money into real estate. You start throwing money into your business. That the business principles are all the same, but we all forget these.
Yeah. Oh man. Amen to all of this. I mean, if I were, a religious chap, I'd be standing at the corner singing Hallelujah all day to this because I love this. I mean, so into we had a discussion that was sort of ended. Came up. One person in the mastermind the other day mentioned that they were concerned about the downturn, but they had it emerged 10 months worth of cash to one side, to which I said, that's fantastic. And then one other person who's got a similar sized business, but actually bigger overheads, said, oh, really? Oh, we just survived month to month. And I thought, and
Yeah.
does that, if you just replay that sentence, that little phrase you just said out loud and replay it and think about it, does that sound like a strategy for going into a known downturn? And by the way, to your point, I don't think the UK is going to have a downturn. I think it's going to have a straight up recession. It's going to be either because the pound is dropping like a stone against the dollar and we import everything we need, including food and oil, which is dollar denominated. So that's bad
Yep.
news. Or we import it from Europe and we've decided to cut our nose off to spite our face for some bizarre political reasons, which is whatever politically you may or may not disagree with it, but economically it's unarguable that that's just not going to help inflation. And then, of course, we are in Europe where the gas price is going through the roof and will go through the roof even more for various reasons like geopolitics and it's winter and it gets cold in Europe. So I think there's nothing that says to me anything other than Europe, in UK particularly, is going to have a swinging recession. So I
It's
just want
gonna
to
be.
put that out there. It's my
It's
personal
gonna
view.
hurt.
It's going to
Yeah.
hurt more
Yeah.
than the US, I think, because the US has a lot of built-in strengths that the UK doesn't. I mean, you're self-sufficient in gas, which is huge right now. You're self-sufficient in oil. You have a lot of farmland, which when the fertilizer of the world stops flowing from Ukraine and Russia, the wheat stops flowing, etc. I could go on, but anyway, I'm a big Peter Zion disciple. If you don't hear it, but so I think being ready, as you say, we can't predict the future, but I think that the writing on the wall is pretty major.
You
Put it that way.
you can absolutely get signs of what you're talking about. And I share your opinion that here in the US, we're actually going to probably start to, I would say accelerate the bottom, if you will, January, February timeframe. As we come into the new year, we're going to start to see that we may have a technical recession, possibly. I'm not an economist in the, either Q1 or Q4. But business is always ahead of that. So you're going to start to see the acceleration. So that come summertime, I think we're going to be thriving again. And I actually don't think we're going to bottom out that hard. I think the UK is unfortunately in for a bit of a mess. But how can you play that to your advantage? How
Yeah.
can you play in the US market where most likely, and a lot of people are saying, I mean, goodness knows anything can happen. But right now, we're pretty strong. We're pretty strong, even if the Feds are raising interest rates right now as we speak, and literally probably this week and such. How do you play within the U.S. market when you start diversifying out? It's the players that have gone to Amazon U.S. and actually have started to build that business as well. And I know that might be a little less likely, or there might be some resistance for some of your UK Amazon folks. I don't know what the Amazon business is like in the UK, so I don't want to speak to that. But how is your diversification strategy? How have you embraced that overall?
Yeah, I would just say to that I have a little bit of a take on that. Obviously, from my position in the UK, with a lot of UK-based sellers, many of whom sell in the US, some of whom
Good.
just sell in UK, Europe, and some of them are sort of dabbling in the US. I would just say to anyone who's listening, and I will bang this drum hard and long because I think there's solid geopolitics and economics behind it. If you're not in the US yet, I can understand why, because it's big and hyper competitive compared to the UK and let alone smaller European markets, and it requires more capital. But guess what? I think it's the only place that I would back North America as a part of the world that hasn't got massive sort of Damocles hanging over it. I mean, you can get into this, and if you really wanted to get into it, Peter Zion is your man, Zeihan or Zeihan. But I would say there's so many reasons why the economies of the rest of the world will falter and die if you're not careful. And if I'm wrong, then I've got it right. wrong. But as you say, you can't predict the future, but you can weigh up the risk factors, right? So I would say if you can get into the US and get accustomed to the level of competition, hone your craft there, and get the capital necessary to go there, then it could be a difference between having a business and having no business, in my opinion. But
Well,
I may be
and
wrong.
here's where strategy comes into play. In that, if you had done that 2 or 3 years ago and you looked at a diversification strategy in your Amazon business, and I know hindsight's 2020 because the people that are looking at it now and saying, "Well, I dabbled or I've avoided it to date," are wishing they had got into it a year or 2 years ago. Just like any other major trend, just like any other thing. That's where cryptocurrency or what have you, which I think is ridiculous, but that's another podcast as well. So it's things such as that where when what timing is everything. So shoulda, woulda, coulda. Here's what I recommend though: if you're going to fight the recession, is we've talked about this before, but you need a financial forecast. Gotta have that. You've got to have cash flow projections that go out at least a year. Number two. And you have to have a strategy in place that actually addresses specifically the recession. And you have to, I'm going to say you have to emotionally disconnect from your business to a certain degree to understand that there are going to be slow periods of time or negative growth, as is a term that people use. I agree, a little ridiculous, but negative growth. And you're going to have times when you have absolute positive growth. What you want to do is you want to make sure that your position for when that positive growth happens, you can take advantage of it and take advantage of it better and more than your competition. But you're going to have the roller coaster of business. It happens all the time. It's surviving of the process. Let me tell you, I ran a business for 21 years, Market Live, which was a leading e-commerce platform. And like you said, we did $2 billion a year on behalf of our customers through our platform. It was a major platform. We had hundreds and hundreds of major retailers doing millions and millions and millions of dollars a year on our platform, and with that, I forgot where I was going with that. With that, we had our ups and downs because retail has its ups and downs. There always is a recession or slower growth, and then our business would contract accordingly. And our customers, some of them would go out of business during these periods of time because they weren't prepared. So we would lose that revenue as well. Then there were other times where there was just rapid growth. It's not, so you've got to be there. You've got to plan your strategy accordingly and be okay with the mindset that, you know what, I don't have to grow every year. I know you want to, but I don't have to grow every year. What I need to do is survive and grow and prosper as those times present itself. Because if you're running a business for the long term, that's the reality of how it works.
Yeah, I love this, and I think it's an important corrective to things that I think in e-commerce marketing particularly lead to an obsession with growing every single year. One is partly, if I may say so, an American mentality, which comes from the American reality, which is unique to any nation. And trying to copy Americans if you're not American is a dumb thing. America has come out of every single decade of its existence as an independent nation, as I understand it, with a bigger economy than every decade before. There is no other country in the world like that. If you don't believe me, go and Google and nerd away on the internet. That is not a thing for anybody else. So the idea of permanent growth is built into the American psyche, I think. And if you're not in America, that's a dangerous way to operate because it doesn't correspond to reality. And the second thing is simply that e-commerce is so new that pretty much nobody's really experienced a recession because, I mean, Amazon didn't really open up the third-party marketplace until the end of, the tail end of the Great Recession, if you like, around 2010, right? So I think
Right.
certainly if you sell on Amazon, but most of e-commerce is, existence when it's been a more mass thing. I mean, you've been in it for long enough to see, those things. And I'm from the
The ups and
sidelines. I remember
downs.
the 2001 and 2008 was not pretty. Um,
The
but
cycles exist.
yeah,
Here's the thing that I think is really important for your listeners to understand is that over the last, I would say 5 or 6 years, we have had this euphoric growth. Even over the last 10 years, I would say, we've been on this upward cycle. Most of your listeners' businesses have started within the last 5 years, my guess is, right? They've taken advantage of this growth and now they've built up to a certain level. They've never seen a downturn. Guys, I'm here to tell you, I've seen a downturn. I've seen 3 downturns and very bad, probably worse than anything we're going to experience here. I hope is in the past and not in the future, right? That we'd see less worse things. But you've been on this ride where capital has been available to you. Interest rates are been at 0 or 1%. I don't know in the UK, maybe 2%, but here money
very
was
similar.
basically free or virtually free. So you could fund as much inventory as you needed, right? That's great. Money's free. I can take it. It's not anymore. I think the Feds again this week are increasing the interest rates, maybe up to a point. I don't even know what they are now. I'm losing track. They're raising it so fast. And so you can't get money fast. That's part of the constriction. And guess who hurts the most from this? Small businesses. This is the ones that get damaged. It's not the big corporations. Big corporations are fine. They have plenty of resources. They've been building up their resources and their war chest for 20, 30 years, 10 years. You've been surviving for 5 years, 6 years, 7 years, 2 years. This can slam right in the face of your business, and you may not survive. So take action as opposed to sitting on your hands and thinking it's just going to blow over. It may not just blow over. I can't emphasize that enough. And you may have never seen this before. Michael, you have seen it, but your listeners in business with this business probably have never seen what they're about ready to see. And so learn.
Absolutely. I mean, just to be clear as well, now I have not seen it as a business owner. I mean, back in 2001, I was a kind of young musician trying to make his way in the world, and so the .com bubble bursting didn't affect me personally. It was just headline
Right.
news, so I was very interested. And then 2008, I mean, I actually bought a house in 2007 as an
Oh,
investment, so that was really bad timing. So I was a little bit involved in the property market or
yeah.
the real estate market in the UK, and it was bad times. But yeah, not really as an entrepreneur. So you've been there in a way that I haven't, and unlike many of my listeners, I've been in the e-commerce space since 2014, so I've just not been in it in anything but a growth phase of the industry as a whole. Individual sectors of it have suffered. Of course, COVID was very, very polarizing because I think COVID was a useful kind of mini test because some people tripled their business in a year and they didn't become
Exactly.
geniuses overnight. It was just an extreme thing. And other people created by 90%. And so that was a bit of a weird one. This is more of a typical kind of recession, right? I think
Well, and
that
also obviously during COVID, e-commerce boomed. So your listeners, they should have done really well and should
yeah.
have grown during that time. So I think it's very important. Here, I just want to give one piece of advice that I was taught by my VCs, Sequoia Capital and others, which your listeners may know, is cut once if you can, cut deeper than you want to cut. Because what you don't want to do if you have employees is you don't want to send the signal that you're going to be cutting again and again and again and again. We're going to cut 3 people here this month, and the next month we cut 2, and next month we cut 5. Okay, it's better just to cut 10 at once. I know it hurts, it's going to be painful, but then it reassures the rest of the employee base and the psyche that they are at least safe for the time being. Nobody's ultimately safe, but they're safe for the time being. And then I want to make sure you communicate a lot during the process as well. And give me one other example from real life. Back in 2000 and was it 2001? We did this. I think we did it in 2002 or 2003. Instead of actually cutting people, we reduced salaries. We reduced salaries by 15%. We were able to pay back those salaries during the better times. So we actually kept track of the reduction. So if you're saying to yourself, so we actually did a layoff. It was just 11 people in our company of 110 at the time. This goes way back to 2002 or 2002, I think it was. And we did a 15% salary reduction. So we did a combination of both. But but I want you to make sure that you do the salary reduction, if you do one, early enough to where it can have meaning. It doesn't have meaning the day you're running out of cash. What it does have meaning for is 2 or 3 months or 4 months when you make those cuts. That multiplier effect will actually really carry you forward. It's an economic fact. So I do recommend sometimes if you do have employees that you cut salaries and save their jobs and keep them going through. So just a recommendation of how to get through this recession if you need to.
Yeah, that's it's difficult, hard-won advice. That I think again, I've seen that with some of the smarter clients I've got that one or two have cut from overheads of say 25 staff down to the mid-teens, and that must have been a difficult time, but they did it fairly quickly because I remember it happened between we had maybe a couple of months in between them coming to mastermind sessions, and they came and relate that, and they actually looked kind of quite relieved, not because they like laying off people, nobody does, but because they knew that their business was in a healthier financial position. So there is relief on the other side of the pain that I suppose we've got to sell ourselves on this, right? And I think
Yep.
that's important to remember because it was very visible. They looked more relaxed than I'd seen them before for quite a long time.
It was the hardest thing that I ever had to do in business, no question. But it allowed my company, which at the time was not a funded company, we were self-funded. It allowed it to survive and then ultimately prosper and thrive as well.
So let's summarize with some sort of, how can we put this? sugar the pill a little bit. I mean, there's going to be some tough times coming, and that implies taking tough decisions now. But tell us a little bit more about the upside of that. Just to try and we've got to sell ourselves on these actions, haven't we? If we're actually going to
Well,
do them.
yeah, no, I mean, the first thing is what you're going to learn from this experience is going to carry you through your entire career. That may not sound like a really good benefit now, but I got to tell you, this is how business works. Every business is cyclical. Every economic cycle is cyclical. There's usually a 10-year cycle, right? 8 to 10 years, and we're seeing it. We're experiencing it. It took a little longer. It was about a 12-year cycle, or even a 13 or 14-year cycle from the last time. So that's what's been unusual about this. I think maybe COVID had something to do with that as well, kind of threw a wrench in things as it did in many things. So I think that's certainly one of the things. The other thing is that I want you to look at the future of how you'll emerge from this. Survival is definitely the key. You have to survive every day, every week, every month. If you're riding really thin right now, you need to figure out how to finance your business to get through this. Better to finance it before the recession, which it's a little bit difficult than when you're in the recession. So we're not quite in the recession yet, but everybody knows it's coming, or at least will be worse than it is today. So it may be hard. You may be too late to be able to finance it, but you might want to take on a little bit more debt in order to get through it, because once you get through it, there is a rainbow at the other side if you get through it. I have experienced a rainbow before, for lack of a better term, and it can be very good because literally competitors will leave the market. They have to. It will. They will leave, and you will be able to take up their slack, so to speak. So your rankings all of a sudden on Amazon will go up because there's less competition. Your PPCs will go down, or your ROAS hopefully goes up, and you're in better shape. But that's at the end of it. You got to get to the end of it. The last thing I would say, well, I've already given this advice, which is you've got to really watch your cash every day, every week, every month. And as entrepreneurs, we really don't like to do this. We don't like to look at our bank account every day. It's not something that we like to run our business every day. We don't like to look at our bank account. So unless it's growing, then we like to look at it. Well, when it's going down, we don't like to look at it. You need to look at it. You need to be financially brave in going through this process. That wasn't the sugarcoating, but the other parts were.
Well, I guess that ties back into you're going to learn a lot from this. I would just say, from what you're saying, you're going to grow from it. So a lot of the biggest growth isn't intellectual learning, is it? It's kind of developing emotional strength to deal with
Oh,
harsh
yes, you're
realities,
so
right?
right.
And I'm not saying I'm a genius at that. I'm not at all. I would say what you're saying is sort of financial bravery is perhaps the biggest kind of emotional thing that seems to be coming out of this for me. Well, look, we could talk forever on this stuff. We better let you get back to going and advising great companies out there, and obviously you got just crazy amounts of fantastic deep level experience. The fact that you've got two recessions, you've survived and thrived afterwards is just not common out there, and for that reason very valuable. So what's the best place people can go to find you and get help from you if they want to explore
Sure.
further?
Yeah, we have a lot of free resources on our website, entrepreneurnow.com, entrepreneurnow.com. And also I'm at kenburke.com. That's my website for my book and for other things. So yeah, feel free to reach out.
Great. So kenburke.com, and that's the sort of your home on the web by the sound of it. Entrepreneurnow.com is also the place where I've seen quite a few articles that relate to this kind of stuff. So that's a really good resource. And then again, since we mentioned it before, I'm just going to mention again that the decision matrix, which is maybe less of a thing in this podcast, but you talked in the last podcast about how you make decisions. But certainly the financial modeling that I think is probably more important than ever, right, to get that right. So I know you've got a model that
Yes.
is what, $99 or something, which frankly for the level of expertise you bring is cheap as chips. And that if you go to amazingfba.com/forecast, FORECAST, if you're listening, then you can get that, or at least check out Ken's financial forecasting model, which I I just cannot say strongly enough how important that has been for the businesses I've worked with that have really succeeded. I mean, that's just a non, um, what's the word? Sine non, whatever the Latin is. You can't do without it. There you go. Can't think of the Latin.
Absolutely. You can't
Yeah,
run a business without it. Otherwise, you're guessing or keeping it in your head. And
yeah,
literally, you will grow to a point where you can't keep every number and everything in your head. Also, you can't forecast effectively without some tool, because your forecast is changing every month and you need to be able to adjust your business. So I want to be able to change my marketing spend and all of a sudden see what the impact on cash flow is 9 months down the road. Well, you can do that with a financial model that you build, which is actually already built for you. That's what I've done. I built the model for you. All you have to do is plug in the numbers, and that's what makes it nice.
I love it. Well, again, if a recession looming forces us to be better business people, that's a good thing. And they say bad
It
habits
will.
breeding good times. Therefore, I guess, we've had a lot of good times, and a lot of us have got bad habits. Me definitely included. I'm the more I talk to entrepreneurs and work with entrepreneurs and talk to guests like yourself, the more humbled I am, really. And all we can do is learn and get better, I guess. But there's a great incentive to get better right now, and I think that's a really positive thing in many ways, as long as we get our skates on. So if you're listening, folks, please go and check out what Ken's got to offer. It's deep stuff, and this is a time to dig deep, I would say. And Ken, fantastic content. Really love the depth of wisdom and the hard-won wisdom at that. Anything that I should have asked you or that I haven't asked you that I should have?
Well, you asked a lot of really great questions, so I think we're good. I mean, just go out there and just be strategic at what you do, because that's how businesses are won. That's how businesses grow to 7, 8, 10 figures at exit, and that's what's really going to create the forecast, the ability for you to realize your dreams with your business and touch more people as well, because every business touches a lot of people, and the more that you can do that and have a positive impact on the world, the better it is. So make sure you survive, make sure you prosper, and make sure you grow.
Great. Well, fantastic. More American optimism to end things there. I
Oh,
love it. Thanks
yes, it
very
is.
much, Ken
I
Burke.
almost forgot I was in the UK here for a moment, right?
It's all
No, you
good
guys have
now.
a lot. I absolutely adore and love the UK. I actually lived in London for 6 months, and it was one of the best experiences of my life, and I can't wait to go back. So you have a wonderful, amazing entrepreneurial country.
Yes, there's certainly a ton of entrepreneurs there, but we do need some input from Americans from time to time to give us a bit more vision. So that's what we got today in spades. So Ken Burke, many thanks for coming on this show.
Thanks, Michael.
Well then, folks, well, if you're listening live and you're still with us, then congratulations, you've got great stamina, because there's lots to take on board here. But if you have any thoughts or comments, do comment below on various platforms, YouTube, Facebook, etc., most of which have comment facility. I will check it out and try and make sure that Ken sees the comment and can respond. But we better let you get on with the rest of your life. And just want to say again, if you've been listening with us live or on the replay, thank you very much. And Ken, big thank you for some amazing
Michael,